Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Obviously, the big news this week has been the potential trade deal between China and the US. Very interesting. This has been described as a substantial phase one deal between China and the US. A little bit light on detail, a little bit of talk about agricultural products, etc. But it's just going to be very interesting to see the detail. Potentially President Trump says this will take maybe 3 to 4 weeks to get written up. There's a meeting coming up in about 4 weeks' time where supposedly they will both sign it. You then have ongoing discussions with, potentially another sort of phase two and a phase three, or just maybe a phase two, depending on how the negotiations go. Although interesting, this morning China has come out and sort of said they actually wanted to get the talks going again very quickly before they sign this phase one deal. So potentially is that a little bit of a spanner in the works. As discussed here many times, both sides really need a deal. Certainly the US economy is slowing down a little bit and is a little bit sluggish. Same can be said of the Chinese economy as well. Obviously, the big issue between sort of China and the US is that China doesn't have to undergo major elections next year, whereas obviously President Trump does. The market's rallied pretty hard on the back of that. It's now just going to be interesting as we go into earnings. The sort of start of earnings week really is to see if the rally can be continued on the back of the numbers coming out on the earnings reports. Because certainly we get some heavyweights reporting this week, JP Morgan, Citibank, Goldman Sachs. Just be very interesting to see what their numbers are. And obviously sort of overlaid on that as well is, the sort of strength of the US economy, which I say is slowing a little bit. Potentially does the Fed give that another little sort of shot in the arm in terms of a rate cut before year end? Certainly just over halfway through October, traditionally a pretty volatile month for equities, and that's certainly been the case this time around as well. Obviously, on the political front, President Trump's still fighting sort of the impeachment inquiry, calling it a witch hunt, bogus, etc., etc. But one interesting fact has come out on Fox News, which really has been a pretty big supporter of President Trump over the last sort of two and a bit years. Their latest poll has actually come out with about 50% supporting the impeachment process. Now, President Trump immediately went on the offensive with that, sort of trying to discredit and trash the news organization. And really pretty interesting here, considering they've been a pretty big supporter of him. Very interesting. Oil seems to have settled back now to, plus or minus sort of $2 from that sort of 55 bucks on WTI. And, really the sort of Saudi, attack really sort of seems a distant memory now. Big news coming out of the UK. We've seen the Queen's speech for sort of the new Parliament, highlighting their main policy is to have Brexit on the 31st of October. Now, on the back of that, PM Johnson has met with the Irish PM, and potentially there is some light at sort of the end of the tunnel, really, if you like. Still a lot of work to be done, but it does appear to be working towards a possible solution, which hopefully all sides will accept. Here in New Zealand, quite interesting, the latest political polls, just over 2 years into this new government, and for the first time, Labour seem to be under a little bit of pressure, and also Prime Minister Ardern as well, sort of losing a little bit of popularity out there. Now that'll obviously be very interesting as we go into the election year 2020. The government just announced a huge surplus, over $7 billion when they're looking for around sort of 3.5. So it'll just be interesting to see what sort of tax cuts, bribes, etc. are sort of promised for the election. Because certainly at present it looks a pretty tight election here in New Zealand. Just on the fixed interest side, obviously, interest rates are extremely low. Argosy have a new bond in the marketplace, 7 years. Minimum rate will be 2.85. If you're interested in that, call us on 0800 867 323. Big push as well on KiwiSaver tax rates. There's quite a few out there who are paying too high a tax rate. Either they haven't put an IRD number down or have just left the tax rate blank, and they're also being taxed at a maximum rate of 28%. So if that is the case, you really do need to check your PIR rates on your KiwiSaver to make sure you're paying the correct tax. Now, as discussed many times, there are plenty of alternatives out there in terms of the dividend shares. Some of these are providing a reasonable dividend compared with sort of interest rates and term deposit rates. And if you're interested in discussing what options are available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.